Hey everybody, Cowboy here. Today is a short clip that discusses how markets behave at the end of calendar quarters and why. If you stick around after this clip, you can find out more about who we are and what we do. Or at the bottom of the screen, go to the website or zap that QR code, take you over to our website. In the meantime, enjoy the video. Now, either ADX or at least price action should show us that as these quarters come to their end, volatility should be low. And why is that? Well, and the gorilla knows this is more gorilla's territory than mine, but these large funds, these billionaire, multi-billion dollar AUM type funds, and those that are in the trillions, they got to balance their books, right? They have to show at the end of calendar periods, whether it's a month, because this happens on a monthly as well, and especially at the end of a quarter, and then especially at the end of a calendar year, or I think a fiscal year matters more, which is like, a fiscal year might be different than a calendar year because a company's fiscal year might go from March to March. I mean, I don't know. That kind of depends on a few factors that are not my forte. But I will say that at the end of a calendar period, whether it's calendar or fiscal, you'll notice that funds have to show profit. So let's say that you started trading in January, right? And in January, you all of a sudden it's like March 28th and you're in profit, right? But you're barely in profit, but your fund can show a profit. But like one or two trades can knock you out of profit, right? It wasn't your best quarter. You're barely in profit. You didn't lose any money. Maybe it was like a tough quarter in the markets where everybody's losing money, but you're barely in profit. Why would at the end of the quarter, when you have to show your numbers, it's like, okay, well, I could make a trade that shows a little bit more profit, but that little bit more profit is not going to impress the shareholders at all. And if I lose that trade, I will no longer be in profit. So going from the black to the red, going out of profit and into loss is going to, even though it's a minimal move in reality, it's going to look very bad. It's optics. So if a company is in profit, especially in a tough market, towards the end of a quarter, there's going to be very little trading because they don't want to rock the boat. And I guarantee you, these asset managers, they all work together in that sense, right? Because they own pieces of each other. BlackRock owns a piece of State Street. State Street owns a piece of,
They're all daisy chained, man. They're all daisy chained. So a volatility in one, a shock in one reverberates throughout the whole system. So one trade, one thing going sideways in the system brings everything down.
Yeah, it's true. Are you wireless, bro?
How did you know?
Because I can hear it because it sounds like trash.
Oh, yeah.
I had to boost your volume up.
All right.
Yeah. So that's no worries. So there you have it. So a shock in one of these companies reverberates. So what that means is that each of these companies, they are incentivized to work together, not to screw things up at the end of the quarter, because that's what matters. If you're just barely in profit at the end of the quarter, why would you screw that up? All the shareholders get upset. Everything doesn't look good. Earnings reports don't go well. Stock prices go down of your fund if your fund is publicly traded. It's all about optics. So we are now here we're at the end of the quarter, and I'm going to tell you the quarter three is oftentimes looked at as the slowest quarter. I mean, I'd have to really dig into the data to verify that, but that tends to be, at least in Forex funds. August is just dead. I mean, is that how it is across the board that you notice?
Yeah. Oh, dude, it's everybody. Yeah, it's dead, dude. You make your everybody's made their profits already. It's a dead, tepid quarter.
Yeah, so you have a dead, tepid quarter. Look, everything still revolves around the farm harvesting calendar. Still, we still farm food, but what we've done is over the centuries we've taken the summer off. So it's just a lot of people are traveling with their kids. Even retail is going to make a difference, even though retail isn't a huge amount of what's going on in the market. It still matters. And so, yeah, it's just a dead quarter. So it also, when you have a low volume of trade, you can make money on the turn, but it's really easy to fall into liquidity traps because there's no liquidity. And liquidity traps, that's another conversation. We're not going to have that today, but I can tell you when liquidity is low, you can really screw things up in the market. It means there's no buyers for what you're selling. And so if there's no buyers for what you're selling, then the price can really go low because there's no floor, right? So when there's low liquidity, you don't want to rock the boat. And this September in particular, there is not only the end of the slow quarter, but there's a lot of uncertainty in the markets. There's a lot. I know in crypto, historically, Bitcoin does really badly in September. That's just how it is. And that probably is a function of low volatility. It's not September is the worst month for Bitcoin, or at least one of the worst. But the rest of the market, it just tends to be slow. So we are live every weekday, 8:30 AM EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.